Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great week, great day, great month, wherever you are and whatever day it is for you. It is Friday on the podcast, as always, so we're bringing that good Friday energy to you. And the past 3 episodes, it's been sunny in Seattle, and it is still sunny in Seattle because this is the 4th episode of the day. So we're bringing that additional good energy to you. The sun in Seattle, it just vibrates. It makes the entire world better because we don't see it enough here. So our energy brings it up. Jonathan is in a place that always gets sun down there in LA, and he is our guest today. Jonathan Yoo from Convoy Home Loans. Down there in LA, they do single family, they do multifamily, and they do home loans from Convoy Home Loans. So it should be a good episode. Jonathan, thanks for hopping on.
Yeah, thank you for having us.
All right. I told you before we get on here, we always like starting with stories. We like to hear how people got to where they are. I'm sure you got a good one. Why don't you take us to the beginning of your story in real estate and tell us how you got here?
Yeah, absolutely. I mean, growing up, I grew up from an immigrant family, so real estate was kind of foreign overall. Everyone's very in the scarcity mindset of not investing and keeping cash. And after college, I was like, I need to find a job. And so the job ended up being in real estate and in the mortgage industry, right? And then that's when I kind of got introduced into the mortgage industry as a whole. And real estate investing was a big part of it just because I saw all these people, clients, right, buying these houses, cash flowing on them, which was a foreign topic for me at the ripe age of 20 and 21. And so I started looking into it further. And as I developed in my career, I left my old company, started my own company, which is Convoy, 5 years ago. And when we first started, we actually niched out to be specific towards investors and, kind of the more than non-conventional people. And that just opened the floodgates to more avenues to real estate invest and find ways to multiply your money, cash flow and whatnot. So we were doing a lot of programs that way. And I was like, hey, if I'm recommending my clients to do these things, I should be doing it as well, right? You put your money where your mouth is. Actually make sure that you're in the ditches with your clients. And so I started then buying real estate. I bought a single family in Koreatown, Los Angeles, turned it from a 6-bedroom, 4-bathroom into a 10-bedroom, 9-bathroom with 2 ADUs on it, kind of maximized that.
10-bedroom, 9-bathroom? Wow.
Yep. Renting it out room by room. Yeah, renting it room by room to students. And then that kind of opened up my eyes in terms of, okay, I can probably multiply this even further if I, a little better, right? If we just went into like multifamily investing. So I started then looking into buying more commercial real estate and went into, acquiring a 16 unit in Koreatown as well. And then also a few single families across the country, Ohio, Texas, Georgia, to try to just diversify the portfolio because I was starting to run into a little resistance in Los Angeles, obviously not a very landlord friendly state. And, so yeah, that's the story of how my portfolio kind of came to be.
Nice, yeah. A really good start to real estate is getting a job in an ancillary. Is that the way you say that?
Yeah, ancillary.
Ancillary. There we go. Job, market, niche, whatever it is, industry. Mortgages is a great way, and it's something that I kind of wish I did back in the day. I got started. I was working corporate. I was working just Microsoft, your standard corporate job. And I wish I had went out and got a job in something that was next to real estate, mortgages, what's another one, like being an inspector
appraiser,
on houses, any of those.
Yeah,
appraiser, something like that, to kind of it gets you a good grounding while you still get paid, you still get your W-2. So I feel like that's a really good start. And anybody out there who is just getting started in real estate, I feel like that's a really good strategy to pursue. So you're in LA, which is similar to Seattle, where I live. Not exactly. I mean, you guys, your house, purchase price value is higher than ours, but it's still really, both our markets are the purchase prices are extremely high, which makes cash flow actually very difficult. You mentioned cash flow a few times in your intro story there. So how are you going about buying properties in these markets and still making the numbers work?
Yeah. So buying a lot of undervalued properties, right? Whether it's on foreclosure, whether it's on, kind of a distressed, right? So I'm doing the work buying these properties at least a 30 to 40% discount, right? And how I'm finding those is I am specifically looking at foreclosure lists, and me being in the lending industry, I have a little more access to this type of data. So I'm able to find a little bit more of, hey, title company, can you, we have a working relationship. Can you send me a list of foreclosure notice of defaults that come out, right? And then I'll have my people go out and reach out to do that. I recently acquired and I forgot to mention this earlier, but I recently acquired a 4 unit, did kind of the same thing, but bought it from a foreclosure tenant and then evicted 2 people because they weren't paying rent for a year, 2 tenants for a year, messed up the entire unit, but I bought that property at like a 40% discount. Right. So
Mm.
that's the type of avenue that I'm taking to buy these things. Because if your cost basis is lower, right, your property taxes are lower, right? And you're able to, if you get everything to market, you can still make a good rent, right? The only reason rents are so low and cash flow is so hard is because there's a lot of restrictions to increasing rent, right? And
Mm.
there's limits, right? In California, the standard is, I think the CPI is the standard plus you get like 3% on top. It's a 5% plus three, whatever CPI is, right? It's the maximum you can increase it. Within
That's the max that you can raise rent.
Correct, in the state of California. in
Interesting. I did
in
not know
in
that.
in specific markets, there is more rent restriction, right? It's called RSO areas that are even more limited. So, like for example, Koreatown is one of those areas. I can only raise rent if I get an old tenant that is existing from previous 3% a year, right? And
Wow,
that
3%.
and it's
Yeah.
very
Okay.
hard to get these tenants out, right? If in terms of properties. So if you're buying something, you have to, that's why I keep emphasizing the discount. You have to buy it at a discount because that equity has to be built in the property for your loan amount to be as small as possible to make the cash flow work. Or you
Yeah.
do what I did with the single family that I bought. You turn a 6 bedroom, 4 bath into a 10 bedroom, 9 bath, rent it out room by room, and then also rent out the ADUs, right? And then that'll give you avenues to get more cash flow. So you have to kind of get creative with how you're doing it. You can't just go out there and buy, like, my properties in Ohio where you go out buy $100,000 property. You know you're going to get $1,800 a month, right? It's not like that in LA because one of the units that I have in Koreatown still, what is it's they're paying 1773 for in the heart of Koreatown, and I can't raise the rents because they're in the RSO specific zoning, and rent stabilization ordinance is what they call it. And I can't raise it. So 1773 in the heart of Koreatown when all the neighbors, the other units are paying $3,000, right? So I had to buy that on a steep discount. So that's kind of how we're going about, acquiring and making sure these properties cash flow in that sense. That's the only
Yeah.
way to do it. I'm sure it's the same for
Yeah.
your market.
Yeah, and
Yeah,
you're identifying these through foreclosures. You're targeting
correct.
the foreclosure,
Correct.
the properties that come on the market through that. Okay,
Correct.
that makes sense.
Yeah.
And you've mentioned ADUs. I mean, that is here in Seattle. That's a huge thing. People are doing is I haven't heard as much rent by the room. I'm sure it's happening. It's just I haven't heard about it. But the ADU thing is huge because we've kind of expanded the laws
Yep.
in the area to allow for more ADUs, which is great. But what do you do? So if that is a strategy that you like to pursue, what are you looking for in the property that kind of gives you the knowledge that it will be a good place to build?
Yeah, I mean lot size is the biggest thing, right? Because there is rules on how much clearance you need from each wall and lot lines, right? So lot size is the main thing. And before I go into any property, I'll do two things, right? I have an appraisal type company that'll do evaluations based on models that I need of how much work I'm going to put in, what I'm going to do to it,
Mm.
and make sure that ARV number, the after repair value number, is good, right? And then secondly, I will reach out to and look at the county and also reach out to kind of engineers and developers and see like what can I do to maximize this property, right? And I'll do those two things during whatever due diligence period that I have. I'll rush everything. If it's a 5-day due diligence or 2-day due diligence, whatever it is, I'll try to have all of that done prior to even going into the deal. So That's kind of what I'm doing, and it's a little bit of an investment. It's a lot. It's obviously money you're throwing at a deal before you buy it, but I think it's worth it because if you don't do that, you only buy right once, right? You can only buy the property once, so you have to buy it correctly the first time, or else you're out more money. So I'll do all this due diligence prior to even going in, and I don't like rushing that. Um, it's very strict for me in that sense.
Yeah. Hey guys, quick break from the show. If you've listened to this podcast before, you know we are always talking about how important it is to have the right mentors and partners in real estate, which is exactly why I've opened up the Real Estate Investing Club online community. It's a place for active investors to learn, collaborate, and get real deals done together. And right now, it is 100% free to join. We host weekly calls where we review deals, talk strategy, and share tactics. Just click the link in the description below and come join us. Yeah, I mean, we repeat that on the episode so many times across countless episodes, how important your due diligence process is. Never miss one of the checkpoints. I'm telling you guys, you got your checklist, go down line by line, do every single step, because maybe that one that you skip over that you just feel like you don't need this time is the one that brings out a red flag that once you buy it, you're kind of stuck with. So your due diligence checklist is so important when you're buying properties, especially when you're doing construction, when you're going ground up. So for your guys' ADUs here in Tacoma area, I think we have 1,000 square foot minimum. Is that what you guys are dealing with down there in LA too?
No, we can build them smaller. Depending, I have an ADU. The ADU that I have built out in the Koreatown house is, well, it's JADU because one's attached to the property, and then the other one is it's freestanding. That one's like 450 square feet.
Oh
So
wow, okay.
yeah, so it doesn't
So
have
it's
to
like a
be
studio.
yeah, 1,000 is kind of crazy, right? I hear 1,000, I'm like, that's like a whole house in LA sometimes, you know? So maybe because the lot sizes are a little bigger, over there, but the lot sizes are a lot smaller here. So we have to work with like 5,000, 4,500 square feet lots, 6,000 square foot lots. Yeah.
Mm, mm. And what's the cost for construction like on a square foot basis?
Uh, I mean, I haven't built one in a while, but let me see. The last one we did took from ground up 200. So, and that was 450. So that was like
200 a foot?
400. No. 200,000 total from ground up
Oh,
construction.
okay. I was
So it
gonna
was
say
like,
that's
it
actually
was,
pretty decent.
no, that's amazing. I wish. It was like 450 a foot, basically.
Okay.
Pretty
Okay.
expensive.
Yeah, that makes
Yeah.
sense.
Yeah.
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 Especially down there in LA.
Yeah.
California prices. My wife is from Santa Rosa, and their
Mm,
family still lives down there, and they got bids to do their kitchen or bathroom or something like
yeah.
that. And all their bids are just like, Jesus Christ, that
Yeah.
is way expensive. What are you guys
Yeah.
doing down there? Right on, man. But hey, so LA is not the only place you invest. You also are out there. You've chosen the Midwest. Tell us about that change, that shift in your strategy. Why'd you choose to start investing elsewhere?
So the biggest thing is landlord friendliness, right?
Mm.
LA, and same thing with your state, right? Little less landlord friendly. I think LA's worse, probably. LA and New York are probably the worst two places for landlords. So, and I saw a lot of my clients start to move towards the Midwest as well. So I was like, hey, if they're doing this, right, and these are the clients I'm talking about, not like mom and pop small investors. These are institutional level investors that are going out there and buying zip codes, right? So I said, okay, if they're doing that, there's something there. I have to get my foot at least in there to see what's going on. So I got out of those markets. Obviously, Ohio, back when it was a little cheaper, before everyone started going in, it was like 120, 90 grand, 80 grand, that type of price. Buy it there. And I was getting rents for like $1,800, $1,700, $1,600. So I said, okay, this is probably, if cash flow wise, this is where I want to be, right? You won't get the appreciation as much as LA or, your market, but from a cash flow perspective, you'll make sure that you can make money there, right? So I started buying there for those reasons. Also, the tenant or the landlord friendliness, like I said, which includes, unfortunately, sometimes you have to do evictions, right? It's part of being a landlord, right? If people don't pay rent, those processes ended up way faster. In LA, it takes almost 6 months to a year to evict someone. In, let's say Ohio, the last person that didn't pay rent that we had to evict only took like a month, right?
Oh,
And
wow.
it was a lot faster, right? The turnover, even Georgia was a little faster, Texas a little faster. Like LA is just one of those markets where I was like, okay, I can't stay here if I want to grow my portfolio just because of all the restrictions. And they keep
Yeah.
making it harder. So unfortunately, I was like, I can't do it. So now I'm trying to move all my portfolio out to, kind of the Midwest areas for the cash flow aspect.
Yeah, that makes a lot of sense.
Yeah.
Are you still buying single family out there? Are you in the multifamily? Are you doing rent by the room? What strategy are you
N-
pursuing out
n-
in the Midwest?
No rent by the rooms out there. Just strictly mostly single families up to 4 units, right? And the reason I'm sticking to residential is it's easier to turn, right? If I'm trying to exit a property or need to exit for some sort of reason, it'll be a lot easier to exit from a residential property than a commercial property, right? The turn times are longer. Residential, a lot of people can come in and buy cash, right? Especially if it's like, you entered in at 120, let's say on a fourplex, and now it's worth 200, right? And you need to sell it quick. You sell it for 180. Like you'll still make a profit, but it'll move quick because someone will buy it for 180, right? So I think that's kind of more so the target market that is most conducive to the cash flow winning aspect instead of being in like Los Angeles where you have to put like we put 1.5 million down to buy that 16 unit, and that's a lot of money, right? So with that 1.5 million, you can buy basically a whole neighborhood, right? In Ohio or anywhere else. They hate us for it. I know that every other state hates Californians, New Yorkers, anyone on the West Coast that has, higher dollar amounts move over there because it makes it a little unaffordable for the people that live there. And I understand that. But we're running out of places to put money, right? Things keep going volatile, and real estate's the tried and true way of kind of storing your value, storing your money. Yeah.
Yeah, I meant to mention earlier. You mentioned some of your clients they buy zip codes, and it popped into my mind something that I've been doing recently. Zip codes, some zip codes are perform better than others, and I wanted to tell you guys this is a little bit of an aside, but I've been using Perplexity. One of the AI tools out there. Perplexity is what I use for research to do this research on zip codes specifically when I'm looking to in a metro that I don't know. One of my coaching clients, they are buying in Michigan, and I don't know Michigan at all, and so I ran this script to find the best zip codes that we could market to, and it is amazing how deep Perplexity and these AI models can go into this research. Something that REITs would only have had access to in the past to find the best zip codes. Now you can do in like 15 minutes. So I just wanted to mention that because zip code investing, finding the right zip codes to invest in a market is very important, especially if you don't know the market well. And now you can do that with AI. So, anyways, I'm going to get
Yeah.
off
I
my
mean,
soapbox there.
to add a little bit to that, obviously, to clarify, I think the difference between Perplexity and ChatGPT, which people don't know, is GPT is a little more, it's like pulling from existing data that was in the past. And then Perplexity is pulling from modern data, right? What's going on right now. So I think that big differential really allows for more information, like you said, to be developed. One of my good friends was a developer in Perplexity, so he was
Oh,
describing to
sick.
me the difference. Yeah, and this was back before GPT was even big. So um, definitely encourage people to look at Perplexity a little more too. Yeah,
Yeah. Yeah. And I have a subscription to every single one of those, to
yeah,
Gemini, to Perplexity, to Grok, to whatever. I got them
yeah,
all the
yeah,
subscriptions. I do like Perplexity the most for research. I like Claude when it comes to like SEO and
yeah.
writing text and coding and stuff, and then Lovable for like mini websites. GPT, I just haven't been using it. I know it's like the big one. For some reason, I don't use it as often. Um, I don't know why. I just don't. The responses I get from ChatGPT, they never impress me as much as Claude or
Yeah,
Perplexity
yeah,
or even Gemini sometimes.
yeah.
So, yeah, it's interesting. That's a whole nother podcast. Anyways, we have run the clock down, so it is time to jump into the quick question round. Are you ready?
Sure.
All right. Starts with starts with education. Could be any form, could be a book you've read, movie you've seen, conference you've gone to, mentorship program you've been a part of, any of that. I just need two recommendations, one for general life wisdom and then one for real estate.
The real estate one, I'd say I really enjoyed The Big Short. right? Just studying, just studying the outlook on how people kind of saw everything, seeing similarities in markets and whatnot. Um, book I've read, my favorite, always hands down, is going to be How to Win Friends and Influence People. That's, I
Oh
think,
yeah,
been the biggest help to my business career. So
yeah.
I'd say that one. Yeah.
Solid. Both solid
Hmm.
recommendations. Big Short, it is I just watched it recently on a flight and I forgot how well the movie's made very well. Not only is
Yeah.
it a good topic, it's like very interesting, but they're just movie, they got all the right actors. It comes
Yeah.
together very well. So yeah, that's a good call out. All right, next question is for your younger self. Let's go back to the Jonathan who was just getting started in the mortgage industry so many years back. Go back to him, look him in the eye, give him one piece of advice moving forward.
Don't be scared.
Nice. I like that.
Yeah,
And it's harder, or it's easier said than done. How about that?
exactly.
Because
Yep.
especially when you're talking about money with something that you haven't done before, if you're not in a financially secure place, putting money into anything, even if it is from other people's perspective, a
Yep.
killer deal, it is scary, but you do have to make that leap. You do have to, just go in, not on, you're going to have a little bit of faith in yourself because 10 years down the road, you're going to be thankful that you started today versus tomorrow.
Yep.
All right. Next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what is your favorite way to generate leads and find new deals?
It's real estate agents are my main point, in title companies. I have good relationships with title companies, so I'll use title companies to source the deals. Right. Again, like I said, main targets are notice of defaults, foreclosures that come up, and then I'll shoot it out to real estate agents that want to work with me and say, hey, can you guys help me get in contact with the seller? Can you help me negotiate this deal? Because I am busy in my own business, so I'll let the professionals handle that aspect of it. But that's been the best way to kind of keep the cycle going.
Nice. That's actually a good strategy that I haven't really nobody's really mentioned is even if you're doing off market stuff, even if you are finding the property that you want without the realtor, getting the realtor into the process, connecting them to take the lead on all of the negotiations and
Yep.
well, not the negotiations, but all the all the transaction coordination kind of stuff is great. It's a great strategy to use. I love finding deals off market and generating leads and that kind of thing. But it is nice to have a realtor in the picture to help them kind of to close it in and bring the person into the contract. So great call out there. All right, next question is lesson learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something goes wrong, and that's when we get to learn a lesson. So, what was a deal that went a little bit sideways for you, and then what was the lesson you pulled from it?
It was the 4 unit I bought in Koreatown that I was fixing up and had to do evictions with. Right, I didn't. The cost of doing the construction and doing all that ended up being a lot more than I expected. So, always just, if you think you have a little bit of a buffer on budgets and whatnot, always create another buffer beyond the buffer that you have, just to be prepared for the worst. Yeah.
Yeah, absolutely. I've learned that lesson the hard way myself. So I'm right with you there. All right. On the other side of the coin is the highlight reel. Those are the deals that that just kind of stand out in our mind as our favorites. So, what is a deal that went well for you, and tell us about it?
Yeah, I mean, I this Koreatown deal that I bought for the 6.4 and turned it into 10.9. I think that was one of my first projects that I've ever done. And we entered in at like 1.6, and now we're exiting at 2.7, selling it to like a nonprofit. So I'd say that's probably the highlight. That's a good return.
Yeah,
Yeah,
absolutely. A million
yeah,
one. Yeah, that's a great
yeah.
return. What was the capex that you put into it?
Uh, we did 300. We probably put like 300 into it. Yeah, to fix it up.
Okay, that's still
To-
yeah, that's still a great return.
yeah, yeah, absolutely. But it was I mean, not all deals are the same, right? That one again was foreclosure notice of default. Like that's when I really got into that kind of rabbit hole of I need to find deals within the circle that are actually truly distressed, because you don't want to buy a property that they don't need to sell, because then you're
Yeah,
not getting a good
yeah,
deal. Yeah.
awesome.
Yeah.
All right, that leads us to the second to last question. We've already kind of touched on this, but I didn't ask you directly about AI. It is here to stay, and it is, at least for me, I try to implement it in as many places as I can responsibly do so. So are you using AI in your business? And then how are you doing so, and how can you recommend others do the same?
Yeah, like you, I love Perplexity, just because of the modern data of it. I think a lot of GPT models are older, right, already, just because of the data that it pulls from. So I would encourage people to look into other AI models because ChatGPT is not the Bible of everything. It's not like a living, breathing thing that will remain the top. So just keep exploring different options. Try running like you do, different models in different places, and see what the responses that each one gives you, and go with the one that fits you best.
Nice. Yeah.
Yeah.
Perplexity is a great call out. That one's it's really good for research. All right. And that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, so you can go to convoyhomeloans.com and click my name and you'll see me on the website. I own the company. And then you can reach out to either chat about real estate investing or different ways, creative ways to get real estate funded, which is our specialty. And once you reach out, we'll kind of have that whole spiel. And if you want to do a portfolio analysis, we can do that as well. Make sure you're optimizing everything and make sure you're getting the best deals on everything.
Right on.
Yep.
I'll put that link in the show notes. So if you guys want to reach out to Jonathan, all you got to do is click the little more in the description. It'll pull down that full description, and in there you can find his links.
Perfect.
All right, man. That wraps it up. Yeah. Thank you very much for hopping on the show.
Thank you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review, a comment, anything like that. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.